In this video, we'll dive into how the cryptocurrency market works, as well as what affects the price of cryptocurrencies. This information is very useful, as it helps you develop a strong mindset so you can easily maximize your profit while lowering your risk. So, how does the cryptocurrency market actually work? Similar to other asset classes, the price of cryptocurrencies is driven mainly by two main factors: the supply and demand, and the greed and fear of investors. Now, let's talk about the supply and demand first. At a basic level, the price of cryptocurrencies is driven by its availability. The scarcer a cryptocurrency is, the higher its price levels. On the other hand, a cryptocurrency with an abundant supply will likely experience lower price levels. So, what can we learn from this experience? Before buying any digital currency, you should first look at its maximum supply. If you look at Bitcoin, for example, there are around 16 million Bitcoins, and there will never be more than 21 million Bitcoins because of a hard-coded limit by Bitcoin's inventor. So because of the scarcity, the price of Bitcoin has reached so high, and there's a high chance that its value will keep going higher and higher in the future. Just look at another coin, such as Digibyte or DGB. Its maximum supply is over 21 billion coins. Well, you can't expect this coin to reach $10,000 per coin. As you can see, there's no scarcity here, as everyone can have it. Now let's take a look at the top 10 cryptocurrencies on the market right now. If you do the math, you'll find that if a coin wants to be in the top 10, its market cap must account for at least 1% of the total market cap. So how can we use this information to predict the future price of a coin that we want to invest in? For example, if you want to invest in a coin, such as Digibyte, just do the simple math. First, calculate 1% of the total market cap. For example, the total market cap is now $500 billion. So 1% of it is $5 billion. Now let's find the maximum supply of Digibyte, which is 21 billion coins. You can easily find this information on coinmarketcap.com. Then you just need to take the 1% of the total market cap and divide it by the maximum supply. $5 billion divided by 21 billion coins is about 24 cents. The price of Digibyte now is about 3 cents per coin. So if this coin can reach the top 10, as an investor, you can expect its value to increase to 24 cents in the future. The second factor that can affect the price of cryptocurrencies is the greed and fear of investors. The most common mistake that many inexperienced investors and traders make is that they tend to trade on emotions rather than on logic. When these people make a profit, they feel more and more greedy. They think that they'll sell their coin when its value goes a bit higher. And when its price reaches a new high, they keep thinking that it will continue to go up, even higher and higher. When the price starts to drop, these people start panicking, and they try to get out of the market as soon as possible. You see, their investment decisions are influenced by their emotions, their greed and fear. Disciplined traders enter into a trade with an exit strategy in mind. They know when the position should be exited and profit, and when they should curtail their loss if the position moves otherwise. After several years of being a swing trader, a value investor, here's what you can learn from my experience. In most cases, the price will not go up in a straight line, but a series of spurts, with retracements in between. The price tends to keep bouncing between support and resistance levels, and if there's an uptrend, it will create higher highs and higher lows. So when the price is going up and then suddenly starts to drop, don't panic. Chances are it'll go up and reach a new high. If you have no idea about support and resistance, don't worry. We'll get into that later in the following lectures. Now, just to make sure we're on the same page, let's take a look at a quick example. The price of your coin will not go up in a straight line like this, but it will keep bouncing between support and resistance levels. And if there's an uptrend, it'll create higher highs and higher lows. So when you buy a coin and then its price suddenly drops, don't panic. Chances are it'll go up and reach a new high. From my experience, the cryptocurrency market is very volatile. The price of your coins can drop by 50 to 80% in one day. Just don't panic. If the drop is out of your control, maybe because of some bad news, you have nothing to worry about. The drop is just temporary because other investors were panicking and they sold their coins to get out of the market as early as possible. What you could do in this case is buy more at the dip and make a huge profit when the price recovers in the next few days. You see, if you trade on emotions, just like other inexperienced investors, you'll hardly make a profit. In the next lecture, I'll teach you my profitable cryptocurrency trading strategies so you can easily make a good profit from your investments.